Stock markets around the world have been hit hard as speculation of growth becomes dismal, even as central banks have confirmed to buy up shares of companies such as Apple. They have been set back a significant percentage. It is particularly evident that the global markets are set for a real deflation, followed by an overreaction by the central bankers as they attempt to cause a hyperinflation. Today we will discuss how this stock market is undoubtedly crashing globally. You came here for the truth, so let me unveil that for you. Today is going to be an overview of what has been happening in the markets just recently here. I'm not going to get into any details. You can read into the articles for yourself. I'll just go over these very quickly here as we look at the market plunging, the Dow plunging 531 points. Stocks plummeted on global growth fears for a second straight day Friday in a plunge that dragged the Dow Industrials into correction territory. Remember, all of this, it's not me. This is the quotes. This happens to be out of the Wall Street Journal. The global market rout pummeled stocks and commodities as fresh evidence emerged that China's economy is slowing, spooking investors. I talked about it yesterday. I've been talking about this for quite a while, actually. I remember months ago showing a video over here where I had 9 separate charts, 9 different indicators that China's economy was slowing. I got a significant percentage of the people give me a thumbs down on that video, because they said, no, you're a fearmonger, you're a liar, I have a lot of money invested in there, and you better not say anything bad about China. I'm not here to do that. I'm here to bring out the truth. I'm here to bring out the information. You have the opinions for yourself. The Dow's more than 1,000 point drop this week was the largest weekly drop since the week ended in 2008. Guess what? Financial crisis part 2. Here we go yet again. Let's look at this out of Bloomberg. The world's 400 richest people lost $182 billion this week from their collective fortunes as weak manufacturing data from China and a rout in commodities sent global markets plunging. So they lost $182 billion. But look at this individual here, John Collins. He's saying a week like this feels really bad. But when you take a step back in a big picture view, it's not a disaster by any means. What he's saying here is simply propaganda. But if you want to be a little more honest, a little more frank, surely $182 billion isn't that bad when you think about the trillions and trillions that are out there. However, it's just showing you that $182 billion can be erased in a very short period of time. In a week of trading, you have such a large loss. What does that say about next week, the week after? And we talk about this all the time, but think about the QE, think about the low interest rates, think about the stock buybacks, think about the central bank purchasing shares on record, and this is still declining. So what's happening here? Let's get into this more. Apple dumps $158 billion and enters a bear market. So here we have Apple, the biggest stock right now, and they are hurting significantly. This is actually one of the stocks that are being purchased by the central banks on record. Shares of Apple's are getting crushed again on Friday, falling 6%. The stock is now down a bruising 8.5% just this week. Think about the significance of that when a stock declines at that rapid pace, at that really significant amount in that short period of time. Think about what that means for you if you were invested in that stock. Would you get spooked out? Would that trigger any possible sell orders that you have put in place? This is very important to note. Look at this. This is a chart for those who are interested. I won't go into it a lot. This font's probably small for you, but essentially what we have is all the different companies that are really affected by what's happened this week, and you can see different important companies such as Hewlett-Packard, Yahoo, and different places here that we can see how far they're off over the 52-week and over the 1 week, and you can see the significant drops that have been taking place. So that's out of CNBC if you want to check that out. Then we look at this out of MarketWatch. Signs of a panic-like selling could be a short-term positive for the Dow Industrials. So let's look at this propaganda right here. Investors may be finally showing some signs of panic on Friday, which contrarians might see as a bullish sign. You, sir, are wrong. This is completely wrong. The contrarian doesn't necessarily want to put all their money in stocks, but this is the way it goes. You have a market, you have really the whole, not even the market, the whole industry focused entirely around paper investments. When they talk about precious metals, they're talking about paper precious metals. When they talk about real estate, they're talking about REITs, they're talking about paper real estate. They're never talking about things that are physical. That's why this is so instrumental to understand what's really going on behind here. Just more propaganda. Then we look at China. Earlier, the Shanghai Composite Index tumbled 4.3%, hitting its lowest level since March. And that's despite Beijing efforts to prop up the market in recent weeks. They're going full steam ahead on what they can do to prevent a market collapse. It's not working at all. Real investors are pulling out while the fake money pours in. Now we've had some harder evidence that China is slowing relatively fast. People have chosen to get out. Real investors moving out, fake printed money moving in. This is what I've been covering for a while. Won't get into it here, but we look at this. Bloomberg. Weak manufacturing data out of China was the latest bad news to wreak havoc on the financial markets this week. We're worried about a global growth concerns that have hit almost every global asset class. Think about that for 1 second here as we see what could potentially happen. A situation in China affects the entire global economy. One factor affecting the whole world. Think about this. Really take a look at that. Is very important. This is from my book where I'm talking about how we are ever going to grow out of this mess. We have this so-called recession, depression, however you want to describe it. It's a downturn. And how are we ever going to get out of it? In previous crashes, there might have been some semblance of a real economy. That's gone. A recovery can't happen the way it did last time because we're not in a bad shape. 75% of the jobs that have been created are low-wage jobs. If people are forced into jobs with low wages, they can't afford to buy many products and services. The economy relies, especially the U.S. economy, relies on the ability of the citizens to consume at their maximum in order for it to stay afloat, and that is presenting danger as a result. I believe in Canada even, the household debt-to-income ratio from off the top of my head here was 163%. People are in massive amounts of debt. Look it up in your country. I'm sure it will be the same factor. US, Canada, really a serious problem in the UK, Australia, and other places. When you have interest rates at this rock bottom prices, people just borrow. And what's going to happen? How are they ever going to climb out of it when all they're doing is borrowing? Let's look at this. Oil, obviously, this has been going down significantly. U.S. oil futures on Friday settled below $41 a barrel for the first time since the Great Recession to suffer the 8th straight weekly loss, the longest streak of weekly losses since 1986. Oil's hurting right now. And there's many reasons for this. Obviously, as I've discussed many times before, it doesn't matter the commodity itself because the computer algorithms see an opportunity and they capitalize on it. So it may be declining for a purpose, but they may be capitalizing on that loss and magnifying it, making it worse than it was. What is the actual real deserved price of oil? I don't know. Let's leave that up for somebody else. Is it a very important commodity? Yes, I do agree. So if people do own oil to a certain extent, then I'm not necessarily even suggesting it's a bad investment, but you have to be diversified. People drop all their money into one particular asset, particularly paper, and it is so dangerous to do that. There are many ways to get into real assets, and this is very important to note that real assets tangible assets, the closer you can get. If you can hold it in your hand, that's the best type of asset. If it's sort of a paper type asset, well, it might be based on a commodity, but it's just not the same. Look how serious this can become in a very short period of time. This is out of the AP. In emerging markets worldwide, currencies are plunging over fears that developing economies are on the verge of a crippling fall. Lots of information in this article here talking about that, talking about what's happening overseas in the East. And basically what we see is this as well. The damage spilled across the oceans with the turmoil jolting investors in New York, Tokyo, and Europe. Investors worrying about China, of course. They fear a trade-disrupting currency war as some countries desperately lower their currency's value to gain a competitive edge. A lower-priced currency makes a country's goods cheaper for foreigners, something that I've covered here extensively. The currency wars are going on right now. China is devaluing, and we've seen this taking place over the past while, in fact, as they print money to keep the value of their yuan low. That's just what's happening with China. But think about it, all countries are doing that. They're all devaluing when they print. So it's a race to the bottom. It is a spiral downward. Now, I don't necessarily agree with this, but I want to read it to you. This individual here, it doesn't mean to be an alarmist or to induce panic, but someone needs to tell the public that there is a plausible scenario in which the U.S. stock market now collapses by another 70% until the Dow Jones Industrial Average falls to about 5,000. This is out of MarketWatch. Remember, I'm not saying that I agree that it's going to fall to 5,000. What I would suggest the possible scenario is that the market declines. Market continues to decline, and then it gets to a territory that becomes excessively dangerous and it begins to compound and snowball. The Federal Reserve, they're going to jump in. They'll engage QE4. They will do something in order to get this going. They'll buy up all the shares of the stock market. It's not a problem, really. You don't have to worry about necessarily the stock market coming down significantly in a deflation, not for too long, because the hyperinflation will be there as the real money begins to pull out. They got the printing presses ready to go. If you found this video informative, please give me a thumbs up. I just wanted to let you know, or to ask you, if you like this type of video, let me know. If you're saying thank you in all the videos, trust me, I appreciate that. I want to hear from all of the subscribers. I try to reply to as much as possible. If I'm doing a big video like this, it's hard for me to use that time to get back to the comments, but I do try to get back to all the comments, and I certainly do reply to all my emails. If you're emailing me, please know that sometimes it takes me about a week or even more to get back to you, so just hang in there. I do keep all the emails in my inbox, and slowly, chronologically, I go through and reply back to those. If you found this video informative, I know you'll find my book, The Money GPS, even more informative. You can actually flip through the book. If you go over to Amazon, they have this feature which allows you to actually flip through the pages of the book and see if you like it. Take care.